For those of you who don't know much about Hudson, we started back in 1992 and we started actually as an education house. We were a research house for 10 years. We morphed into financial planning and we look after 3,000 clients Australia-wide, and we've been very traditional financial planners. The last couple of years we've noticed a lot of interest in alternative assets like cryptocurrency. So in the last sort of 6 months we've gotten to know the Kersai team really well, and we thought it would be a really great value add for our clients to learn a lot about cryptocurrency, because the more you know about something, the more confidence you have to have a go of it yourself. And of course, being traditional planners, we like to think that you've already looked after your long-term financial foundation over here, and you've got the ability to have a little bit more of a investment in some alternative assets like cryptocurrency, knowing that no matter what happens, you looked after. So without further ado, I'm going to introduce the Kersai boys, Jonathan and Asita.
So just to tell about us, we started eight years ago. How we started was just as a hobby. Jonathan is my neighbor, and we used to he always used to come and pester me with telling about Bitcoin, and every day without every morning he used to come to my place and says, "Hey, have you heard about Bitcoin? Have you heard about Bitcoin?" So I've been always saying, yeah, but I'm not that interested maybe at that time, because prior to that I had a friend of mine about 6-7 years ago. He was also pestering me to buy Bitcoin. Everybody has a story, which if I would have done that today, I won't be sitting here. But but he was in US, so I didn't take his advice to buy Bitcoin. At that time, it was about $32. So anyway, to cut a long story short, so we kind of found a way. After that, I kind of had a look at Bitcoin and what the cryptocurrency market was doing in terms of trading, and Jonathan kind of showed me around, and then we found out, look, there are ways how you could make money out of cryptocurrencies at that time, Bitcoin. So we started as a hobby, and we were we saw arbitrage opportunities in the from exchanges, from you can buy from Germany and sell in Australia with a big margin, and we were doing that. And then while we were doing that, we had a large community that was coming to us and asking for which coins to buy, and because it was so volatile and people losing money, and we were helping out. So because of that, the community became big, and then we thought, look, let's start a business, and that's how we started 8 years ago. And we started with a Excel sheet, and we then after that we started building a platform for the last 8 years, and we are today we have a fully fledged platform that teaches people, and not only we teach, we support, we have automations, we have done quite a lot, and and that's how we did. And if you go to the next slide, then I think without boring you, so this is what we're going to do today. So I'm going to invite my business partner and the founder of Blockchain Education to come and present you what cryptocurrencies is all about, and what is the truth about cryptocurrencies, and how it has evolved up to now. And we will keep the questions to the end, so that we will have a good session of questions. You can ask any questions about cryptocurrencies, about trading, about anything that relates to this, and we'll try and quickly go through the slides as fast as possible, and then we will get into questions. So over to you, Jonathan. Thanks. Thank you.
Thanks, mate. I'd start by saying thank you to turning up. We have lots of our members here as well, and thanks to the Hudson crew. I've already got one. I'm good. Yeah, I don't need to be recorded 3 times. I know, like, we made the presentation designed around the idea that the vast quantity of people in the audience are going to be quite skeptical, and that's a really appropriate attitude to take, even in 2024 when it comes to cryptocurrency, blockchain technology, whatever that is. That could be a solution in search of a problem. So the presentation that I provide may come across being a little bit negative, a bit ranty. It's not designed that way. But if you were looking for a way to make money with this immature technology, then one of the best ways to make money is basically by not losing money and not getting caught in scams or Ponzi schemes or ICOs or NFTs or any number of mechanisms that exist to essentially take custody of your Bitcoin or your crypto. So as soon as you hand over your cryptocurrency to someone else, you're really taking quite a risk there. And there's this apt saying that people say, and usually they say it in fancy pants financial, the chrome and the glass towers. They say, it's the Wild West. It's not the Wild West. Because in the Wild West, the bad guys get shot every now and then. Like, there's always somebody who shoots them. In this industry, they get away with it. They take your crypto, and if they're and I don't want to, single out nation states, but if they're a Chinese or a Russian hacker, assuming that's who you think they are, they can take your cryptocurrency, they can create a wonderful website that looks entirely legitimate, and as soon as you hand over your custody, you can say goodbye to that. And the Australian government, unfortunately, are in a scenario like a lot of other governments where they're trying to deal with it. So this is really my way of saying that I agree with the skeptical, conservative, reluctant attitude that's out there in the world, not just Australia. And I also understand where the government's sitting. It's kind of sitting there saying, wow, there's so much potential here, but there's also so much potential to lose money. So we're going to race through these. I think most of you probably have a pretty good understanding of crypto. I'm going to ask, though, this is always such a dumb question, but who knows somebody, maybe yourself, that has invested in crypto or has been scammed in crypto or has been involved in some way? Yeah. Yeah, sometimes they're the same thing, aren't they? Sometimes it can be a slow scam. It was roughly half the people, and the Australian tax department and the SwiftX kind of suggest 1 in 4 Australians have been involved, bought crypto, been involved somehow. I think it's about 1 in 4, maybe a little bit higher than that. And when you think about that, you would imagine that if, say, 7 million people, which is what the recent studies are suggesting, 7 million Australians are involved, and yet there is a giant vacuum of information. So we're going to talk about why that exists and some of the challenges that people have when they see these numbers and they see that, for example, Bitcoin itself from the beginning of this year is up nearly 60%, just from the beginning of this year. So if you just bought it in January a couple of months ago, it's up 60%, 60. But if you bought it January last year, it's up 230%. So that's just insane. That's like quite crazy that you can double or triple your money in a year or so legally if you knew when to buy it and when to sell it and not give custody to someone and just get scammed. So anyway, without going much further, what is cryptocurrency? Where did it come from? What makes it unique and special? How can you benefit from it? Is it too good to be true? Good question. What is holding back global adoption? That's kind of that scammy stuff I was talking about. Why does the public need crypto education in general? Is it too late to get into crypto? Spoiler alert, no. It's actually probably a really good time now, especially for conservative people. How are you actually making money with it? And what do we do to help? So like Casita said, we've been doing this for like 8 years. All I've done is basically help people for 8 years. Before I get into this, I should try and disarm you a little bit more, because remember, I'm imagining that you're super skeptical. So we don't sell crypto, we never have, we never will. We don't have an ICO or an NFT. We don't sell or promote any particular project. We don't particularly care about the fundamentals or the sentiment or the underlying mechanics of any one individual cryptocurrency. So you might question yourself, like, how are you even making money? So we fulfilled a void in the world for education back 8 years ago, and we still do it today. And I'll talk about how that happened. It began in 2009 with Bitcoin. So most people don't even understand that Bitcoin was invented by something which was probably even more insane, and that is by an anonymous benefactor, a ghost. Like, nobody knows who made it. So a transparent, immutable, decentralized, distributed blockchain, a network that's never been hacked, that's over a decade, over like trillions of dollars going through a financial platform that was built by one entity, and yet nobody even knows what or who that was. Was it man, woman? Was it the CIA? Nobody knows. So that to me seems even more insane. Satoshi Nakamoto, that concept is even more insane than crypto itself. How could you invent something with global adoption, with hundreds of millions of people pushing trillions of dollars through a platform, but somehow anonymously do it? Even the NSA and the CIA haven't worked this out. So that kind of makes you start thinking like, maybe there is something to crypto. If somebody can pull that off, then maybe this is a big deal, because that's really insane. And Pulitzer Prize-winning journos and investigative journalists just haven't found it. They just don't have a clue. Nobody has a single idea. There's a few things. In fact, ironically, one of the people who claims to be Satoshi is Craig Wright, which is an Australian who got in trouble with the tax department and then suddenly decided he wasn't crypto. Anyway, he's not Satoshi. What is it? It's basically a new way to send money or value over the internet without third parties. So you don't, if you're using the Bitcoin protocol, you can technically take a vast amount of money or value from here and send it over into the middle of some sanctioned country like Russia and not use a single bank, not have to ask a solicitor or a lawyer, an accountant or a bank or an existing financial platform or service. You don't use the SWIFT system. You don't use anything like that. You can just send it as a protocol. It's like sending an email. So as you know, a lot of the time you can send an email, and technically if you use the email protocol, you can send it direct to the person without having to even go through a company like Google or Yahoo. You can actually set it up so that you can send it. So it became interesting that you could do that. And in doing so, it became quite popular and became a medium of exchange and a store of value. So it's a medium of exchange. In other words, you could use it. If it has value, you can send it to someone and say, I'm giving you this Bitcoin or this crypto. It's valuable. I'm giving it to you for something else. You give it back to me. So it's a medium of exchange, but it's also a store of value. And this store of value is where I think a lot of people have ignored the astronomical financial implications of what is going on. You could have bought cryptocurrency, specifically Bitcoin, a year and a half ago, and now you're up 230%. So it's a store of value, and now it's even more important to understand how important Bitcoin specifically is, because BlackRock's involved, world's largest asset manager, $10 trillion. They have the world's fastest ETF. We're going to talk about that. So this question is a good one. What's it backed by? Everybody loves to ask that. What's Bitcoin backed by? You know, what's the Australian dollar backed by, the US dollar? So we remember it used to be gold, and they came off the gold standard, and now we just assume that the mighty US dollars is backed by, I don't know, the government of the United States. So it's a weird question, but it's a good one. What's it backed by? And the whole answer is ultimately it's backed by technology. Like, I'm talking through a wireless microphone on a flat screen TV. There's a stadium over there with thousands of people in it. It's the technology. It's the zeros and the ones flying through the system. But specifically, it's cryptography. Cryptography is this idea that you can securely transmit information across the internet. So that's probably pretty important if you're going to try and transmit something that's actually valuable. You can't just simply send you a Bitcoin and send the same Bitcoin to you and maybe one to you, because that concept of cloning the Bitcoin would kind of break the whole network. So usually you have third parties involved, like banks and ledgers and accountants and solicitors, and they're all looking at it saying, oh, if you send it to him, then you know I'm going to change your record, so you're zero now. So you can't send it a second or a third time. So usually there's third parties involved that are essentially watching what's going on. What made cryptocurrency amazing was, like I said, you can send it without third parties. You can also validate and basically run an entire global ledger without third parties. A couple of days ago, it's about 6 days ago, the Bitcoin network did its billionth transaction. So if you think about Visa doing lots of transactions, they're doing like billions of transactions every single day. It's taken a decade to get Bitcoin to this place, but it has done 1 billion transactions now. It's also, most people don't realize, that Bitcoin is the oldest running, longest term, uninterrupted, non-hacked network on the planet. So there is no other network that has been continuously running for over a decade that hasn't been broken, turned off, upgraded, downgraded, hacked. You know, ultimately it is the #1 coolest network of all time. It's distributed. You're probably wondering how is it possible to do it without third parties? So people talk about Bitcoin mining. There's only one thing more annoying than taking a purely digital currency and calling it Bitcoin and then associating it with a physical thing. The only one more annoying thing than that is saying that you're mining for it, which then makes you think about gold, because there's no mining at all. So when somebody says, oh, they're a Bitcoin miner or they want to mine Bitcoin, what they're really talking about is this validation. They're validating the integrity of the transactions going across the network. So if you have this capacity to send money and value all around the world instantaneously, all that sort of stuff without third parties, somebody's got to be double checking that everything's fine. And that's what a miner does. They validate the transactions across a global ledger. So that's what a miner is. This popular technology took off like really quickly because people were like, oh, this is pretty crazy. You can sort of do this. And maybe I don't want to send value over there for, I don't know, buying and selling purposes. Maybe I want to make a token. I want to do something different with the Bitcoin network. So when the technology was released in an open source way by, remember, the ghost that just gave it to us, everybody was like, oh, it's open source, I can clone this. I'll just make my own coin. One of the first one was Litecoin. What's happened is it spawned thousands of clones. Some developers were smart enough to actually modify the original protocol and the original algorithms to actually make something unique like Ethereum. But most of them just pretty much cloned it and then gave themselves all the coins and then just started selling it. And the aspirations was, I'm going to sell you my own coin and it's going to go up in value, thus making it a security product, which they weren't licensed to sell. That's all coming around now. We'll talk about how the government's cleaning up the industry and sending people to jail and all that sort of stuff. Because just because you can do it doesn't mean you should do it. Just because I could, for example, send my wife's grandmother Bitcoin in Crimea in Russia, because I can do that with like 2 mouse clicks, that doesn't mean I'm evading Australian sanctions, which are on that geographical area. So back when it was created a decade ago, the whole utopian vision was we're going to build a system based on technology that no one can stop. I'm going to send the money over there and you can't tell me what to do because I can do it anonymously, I can do it instantaneously, I can do it without third parties, I can do it without government approval, I can basically go and send it over there and get myself some heroin from a dark web and have it sent back. There was great ideas. This is my favorite. I can make hundreds of thousands of dollars and not report anything to the ATO. And there's so many, we've had a lot of funny members who come to us with this utopian vision of usurping the existing legacy system. That's not what crypto is about. That's not what Satoshi imagined, although some people think it is. But is it a digital currency? Is it a currency? Because they're not really treating it like a currency because you have to pay capital gains. They treat it more like a commodity. Most governments treat it more like a commodity. And that brings us to an important point. A commodity is something that's traditionally scarce. And that's one of the other interesting things about crypto, specifically Bitcoin. It is mathematically scarce. There's only ever going to be 21 million of them. And so it's outside the bounds of government manipulation. You can't just do quantitative easing. All right, mate, hit me with another slide. So we talked about this, it's a ghost, but being a ghost that benefacted us, donated this technology to us and then disappeared, just left this giant information vacuum. Imagine, there's no CEO of Bitcoin and there's no, it's not like Coca-Cola, there's no marketing team, there's no support desk. And yet it's trillions of dollars running through the system. So there's no centralized entity, which means, great, you can't shut it down like they did with eGold, another digital platform that came out a while ago. But because there is no central entity, there's no one really in charge of educating the general public, and there's certainly no one in charge of policing it. Like I said, it's government resistant, so you can evade taxes and sanctions, and it can also be used anonymously for naughty things like hiring a hitman legitimately, buying your drugs, all that sort of stuff. Most of these have been shut down because the decentralized nature of the technology is a bit of an illusion. The reality is in Australia, for example, the vast majority of people who have ever used crypto have bought it through an exchange. And most exchanges have KYC and they're centralized. It's not decentralized. So this decentralized idea is kind of going away now because nation states have applied a level of laws that, to be honest, were there in the first place that has muted the technology. We talked about unhacked. It possibly a solution in search of a problem. It would be great for voting. So if you're wondering how that works, imagine you have a global distributed network. So distributed meaning that it's everywhere. It's decentralized, so there's no single place that you can just break. It's immutable, meaning that you can't change it. And then you could use it to monitor who votes. So in an Australian election, you go there, you show your ID, you go into a blockchain, you voted. There is no way you can vote a second time. You're in the blockchain, and there's no person on the planet that can manipulate the blockchain. They can't just go and edit it and pretend you didn't vote. So it could be great for voting. The fact that it's not used, well, the fact that it's not used means that they don't want us to do that. But from a technology point of view, blockchain technology would be perfect for voting, but not much else. And that's part of that skepticism that I have for the entire industry. When people talk about blockchain technology replacing certain things, making the world better, all that sort of stuff, usually it's the justification for why they create a digital token in the first place and launch it at an ICO. And what that essentially means is they're trying to basically get your money. You give me all your money and I'll give you my token, because the token's going to revolutionize the world. It's going to change the world. And a lot of the time, if you ask a question like, so what actual problem are you fixing that hasn't already been fixed using traditional legacy systems in a perfectly adequate way? They don't like it when I ask that question. We sponsored a blockchain conference and I was asking that and they're just like, oh, don't ask that question. You're going to screw up my fundraising. My fundraising as in my get custody of your money. Anyway, the main thing is BlackRock believes in it now. So specifically BlackRock, world's largest asset manager, $10 trillion under management. BlackRock believes in Bitcoin. So they got approved to do an exchange-traded fund in Bitcoin. You're not going to see BlackRock getting into some of these dodgy tokens that came out about 3 years ago where they were going to change the world. BlackRock believes in Bitcoin. And I think if you're very conservative and you just want to get into crypto and you want to understand the reality of the industry, it's literally about Bitcoin. That said, there's an astonishing opportunity to make ludicrous gains legally by looking at alternative coins, and I hate that word, digital tokens or digital things. Yeah, just briefly on that last slide, one of the reasons that BlackRock got into it was the SEC and the FTC of America declared Bitcoin not a security product. So the assumption was that when Bitcoin launched, I mean, what were they going to do? Like blame the benefactor of the original? Oh, sorry, we don't know who that is. But anyway, they looked at the way that it was launched and they said that it was launched from a purely utility point of view to create something that wasn't about an expectation of value. So they didn't launch Bitcoin saying, oh, in 3 months' time, your Bitcoin will be worth so much more. In fact, for the first couple of years, Bitcoin was worth literally nothing. Everybody has heard that story about the guy who, bought a pizza with 50,000 Bitcoin. Yeah. I was one of those idiots. I bought a motherboard for 2 Bitcoins not so long ago. And that motherboard's still in my house. It's a little bit of plastic and, anyway. Couple of $100,000 worth. So let's forget about Bitcoin for a second and talk about cryptocurrency in general. Like, what makes that special? Well, the reality is that Bitcoin technology is easy to clone, like I said, so anyone can do it. The low barriers to entry. You can literally make a coin. I was going to show you how to do it, but I'm already taking longer than I expected. You can make a coin on the internet in about 30 seconds. Don't do it, by the way, but you can go to YouTube and say, make my own cryptocurrency. It's not a difficult thing. There's literally websites where you go, you give it a silly name, you tell it how many coins you want. Anybody can make it. As a result, there's thousands of cryptocurrencies to choose from. CoinMarketCap. So I was going to pull that up, but ultimately, take my word for it. There's hundreds of thousands of cryptocurrencies which mimic the performance of Bitcoin, but which are at the most basic level just a cash grab. So we could all create a coin today. And as long as we all go out like Jehovah's Witnesses and spread the word of our coin, we'll start bringing in the money and giving them worthless tokens. So I have a pretty skeptical approach to the industry, and so should you. We'll work out why. The market cap is even more hilarious because they're trying to map the concept of a market capitalization from traditional markets onto crypto. So if you've got 100,000 digital tokens, that are all presumably worth some random amount that you just come up with. You multiply 100,000 by that random amount, and apparently the market cap is something like $10 trillion. But don't believe that for a second, because there's not $10 trillion worth of value in the crypto industry. It's just like if I launch a coin with you today and there's 100 of them, and I'm charging $1 million a coin, now we've got a $100 million market cap, except nobody's buying the coin. One of the things that we do is we basically isolate coins that no one's buying and nobody's interested in, that are just pure and out of scams, and just basically remove them out of your mindset. That's how you're going to get an edge. That's the only way to make money, is to primarily avoid losing money. There's unique and innovative ways of pushing technological limits. There's utility coins, like the Adelaide government got pulled into a scam not so long ago, about 7 years ago. They got into a digital token that was apparently, it's called power. And it's a digital blockchain representation of all of the power coming out of certain power plants. Because for whatever reason, they thought they needed transparency to map like a kilojoule of power to a token or something like that. Great idea, except what you'll discover, and what most people don't realize, is there is no correlation between utility value or actual usefulness of a cryptocurrency and what a trader will pay for it. So some of the best cryptocurrencies, like Ethereum, that actually have legitimate fabric of society changing benefits and abilities, are just not really respected by traders, and they're going down in value. So we'll talk about that as well. Ultimately, anyone can run a Ponzi scheme, a multi-level marketing, an NFT or an ICO. What's an NFT? It's a non-fungible token. That means I can take that image there, I can lock it into a blockchain and pretend it's worth 5 Ethereum and sell it to you for $10,000, and God knows what you do with it after that. But you can claim that you're the only one in the entire world that digitally owns that image. It sounds insane until you realize that they're still selling digital images of apes. Apes, like what a monkey, like it's ironic, like you'd have to be a monkey to buy one, but hundreds and hundreds of thousands of dollars. And unfortunately for Australians, like tens of millions of dollars were spent on NFTs over the last couple of years, because of that marketing concept that you're getting the original unique ownership digitally of some sort of image or something. So even the utility coins and even the NFTs are kind of questionable as to whether or not you should even invest in them. Certainly multi-level marketing Ponzi schemes like the one we went to about a week ago are pretty weird. The ICOs are a little bit weird as well. An ICO is like an initial coin offering. It's when somebody comes out, like we were going to do, and starts a project, and you go out there and you tell everyone we're doing our own coin. You can buy it for 17 cents Australian, and if you hold on to it, it's going to go up. Oh, sorry, security product. But let's pretend we're not promoting it as a security product, but that's called an initial coin offering. So you're the first to buy. We went to one of those a little while ago as well. They're still doing them. And it's kind of an attractive thing, because if you have a pretty good marketing spiel, you could convince people that if they buy your crypto today, that sometime in the future it might be worth more. It's very good for greed and all that sort of stuff. It does have the ability, this blockchain technology, which is essentially the protocol layer that Bitcoin's built on, it does have the ability to change the fabric of society. And I like the idea of fractionalized real estate. And I like the idea of fractionalized ownership. If somebody wants to own that chair, technically, there's a lot of ways to do it. I don't think using blockchain technology is a very smart way to do it, but some people will argue, I can quite easily have a Microsoft database, a spreadsheet, and I can say, you, and you own that, let's have a copy of that, and you guys have a copy of it. But there are certain use cases where I can see blockchain technology changing the world. But what's really interesting is you can actually learn how to trade cryptocurrencies. What does that even mean? That means that there are legitimate cryptocurrencies. And when I say legitimate, it means that they've been vetted. Maybe they have some sort of utility. At the very minimum, it's a digital asset that you can buy on a regulated exchange. And if that's the reality, then technically, if you get your timing right, you can buy an asset at a certain price and sell it at a certain price, make a gain, presumably, pay your capital gains on that, and hey presto, you've made 250% like Bitcoin if you bought Bitcoin a year and a half ago. So it can be thought of as a very fast, lucrative money-making opportunity. But that's really about isolating the cryptocurrencies that are legitimate, that are legal to buy, that probably have momentum and upside ability to go higher, that aren't security products, that you can simply buy here in Australia for, let's say, Australian dollars and sell presumably in the future. And that simple concept is what we've been teaching for 8 years. The idea that most other applications of the technology from a money-making point of view are just straight up gambling. Isolating cryptocurrencies that are legal to buy, that look like they've got the potential to go up, and then traveling and trending and trading, that's not that hard. We've been teaching it to thousands and thousands of people for 8 years. All right, how do you even benefit from this cryptocurrency? So you can turn, I was going to say you can double, triple, quadruple your money in a week, which you can. It happens all the time. It really does. But you can turn a small amount into a large amount relatively quickly. So when I talk to people, they want lots, like high gains, low risk, extremely easy, extremely fast, massive upside. Like you can choose 2 out of 5 or 6 or something. You can tame the volatility and the risk with a mathematical framework. And notice I use the word mathematical instead of emotional, because a lot of the people on YouTube and Twitter and a lot of the people that will teach you apparently how to find cryptocurrencies and buy them and sell them, they're using their emotions. A lot of the time they're invested heavily themselves in a specific coin. They'll say, oh, you got to buy this because I bought this, whatever. Mathematical framework means that I can repeat what we teach to any asset on the planet on any time frame, and I'm always going to get the same sort of result. It's not going to be because today I'm excited and I've had too much coffee, tomorrow I'm a bit down. You know, my personal opinion about a digital asset's evaluation is irrelevant if you have a mathematical framework. So how can you benefit from cryptocurrency? Well, how about diversifying an investment portfolio into a technology industry? So for some people, if they're sort of in control of their financial situation and they feel fairly comfortable, they feel like they've got lots of long-term value stored away. Maybe they're in real estate, maybe they've got good super, maybe they've got a good business. If you have a small amount of cryptocurrency on your mind, like you really want to get into this because you can't help but ignore the fact that it just went up 250% in a year and a half, how do you get in? So that is a benefit of buying crypto. You can diversify your portfolio. So if you're really heavy into real estate and you think maybe things are going to roll over, maybe I need to diversify just a little bit, certainly that's an option. And I know Hudson can help when it comes to crypto and super and diversification of your portfolio. So that's something that's interesting. This concept of technical analysis is what we rely on to teach people how to analyze the value of a cryptocurrency. So some people are experts at valuing a piece of real estate. So it's like, I'm thinking about buying that, it's going to cost me a fortune. I'm trying to mentally work out what it's worth in about 10 years' time. I'm going to factor in a whole bunch of things. I'm going to apply some sort of emotionless framework onto that real estate, and I'm going to sell it yes or no, that's a good buy, right today. So that's what we do when it comes to cryptocurrency, and we use technical analysis to do that. It's not my opinion. In fact, all of the tutors and the senior members and the people that we've been working with, they basically follow the same thing because it actually works. But it's going to take a bit of discipline to wrap your brain around that, just as it would in any other industry. The same knowledge, as it happens, works in stocks, forex, precious metals, equities, everything. It's the same mathematical framework that you can use to analyze a digital asset or an asset in general, and work out whether it's good or bad. So there's two parts: buy and hold or buy and trade. So buy and hold used to be the old adage: you just buy it and you hold on. The problem with that was, as I said, like there was thousands and thousands of clones of Bitcoin, and the vast majority of them are going straight down. I can prove that. Part of our edge is we ignore 97 to 98% of all of the cryptocurrencies that exist on all the regulated exchanges right now that are going straight down. They're literally going straight down. They're certainly going down compared to Bitcoin. Bitcoin's a superior option to about 97 to 98%. And I don't use that percent lightly. That's the actual percentage. Yeah, 97%. Imagine that. Imagine that an Australian in a developed country with lots of laws can go onto an exchange knowing full well that 97% of the assets that apparently they're supposed to buy have just gone down and going to continue to go down. Like that just seems like a total scam to me. So what we try and do is we try and give everybody the edge by essentially saying, look, this whole idea of buying and just holding on, that doesn't work for most cryptocurrency. That probably works for Bitcoin and maybe Bitcoin alone. In fact, if you believe in probably the second most popular, most stringent, most robust cryptocurrency, Ethereum, and you believe in the technological prowess and the upgrades that it brings to the market, you would imagine Ethereum would be great. But if you had to choose between Ethereum and Bitcoin, Bitcoin has trounced it over the last like 2 or 3 years. In fact, Ethereum's down something like 41% in the last year and a half against Bitcoin. So even the second largest, most popular, most technically adept coin is getting hammered with the whole buy and hold strategy. What we discovered was that those cryptocurrencies that I'm so quick to deride, those thousands of them, they do have their moments in the sun. They have these little trading windows that exist where the cryptocurrency goes from being worth, say, $1 to being worth $12 in 2 weeks on a regulated exchange with hundreds of millions of dollars of volume. And you're like, how is that even possible? How is it even legal? But it is. So if you wrap your head around like this concept of trading, and instead of thinking like a scalper, like you're chained to a computer every single day of the week, if you had some sort of mechanism that could show you what was potentially going up in the future, especially in relation to the vast majority of coins going down, so relatively speaking, that might actually work out. And we tend to find that that does work out pretty good. We tend to find that the buying and trading, the speculative nature of these assets, more akin to penny stocks, this buying and trading approach has been better than buying and holding. So some people are going to look at Bitcoin and think, yeah, but you keep saying if you bought it in January 2023, which is only about a year and a half ago, you would have been up 250%. You say, yeah, but I can also show you a dozen coins that we've been talking about this month that are up 250% in 1 month. So there are other cryptocurrencies, don't get me wrong, that are massively outperforming even the insanity that is Bitcoin. And that's what we basically do. One final thing. Apparently, cryptocurrency markets offer a level playing field for retail traders. So you can technically get into the markets without having to spend a vast quantity of money. There's no real massive restrictions on getting into crypto. You can get into crypto in about, I don't know, a day and a half if you do your KYC, you fund your account, you buy a crypto. You can buy $50, $10. I think you can buy about $10. I think that's about the minimum. But even some shares cost far more than that, and there's usually minimum deposits, all that sort of stuff. So I don't agree with this. This is information coming from the industry. It's not a level play. It's not fair at all. It's probably the most manipulated market on the planet, which is why our mathematical framework is so useful, because it ignores 99% of the BS. Apparently, no single entity can control or manipulate the market. I kind of agree with that as well. No single entity. But you could get a bunch of entities together and manipulate the market. All right, hit me with another slide. Right, is it too good to be true? Well, normally I have this weird thing where I have to kind of convince people. I remember I assumed that everybody here was like hyper skeptical. And I can spend like 20 minutes explaining why it's all legit and crypto's okay. But now I can just say, look, BlackRock's involved. So $10 trillion assets under management, launched the fastest growing ETF of all time. Not an exaggeration, the fastest growing ETF of all time. Gathered up 18 billion with a B since January the 11th. So if BlackRock's involved, you know it's kind of legit. Nearly 18 billion. So Binance, which is the world's largest exchange, is now saying that there's 170 million users. We think there's about an extra 30 million on top of that, non-duplicates. So I think personally there's around about 200 million users of crypto in the world. I don't think it's much more than that. This is an interesting one. I was going to pull this up as well, but you just have to assume that I know what I'm talking about. Visa, about 3 to 4 weeks ago, got together with a company called Alalium or something. And they started tracking the amount of transactions across what's called a stable coin. Basically, they're looking at how much money is actually going through the system. And so this is Visa, not some scammy company. So Visa has very accurately tracked it to about $2.5 trillion a month with a T. And when I read that, I'm like, what? But it's Visa. So legitimately, a lot of that's wash trading and moving around in circles and stuff, but it really does go to show that crypto has grown up. It's much bigger than we expect. Hundreds of thousands of merchants actually accept it. Remember, it's a medium of exchange, so you can technically sell stuff on your website for crypto. PayPal now involved 380 million registered users. They've got a method to transfer fiat currency into crypto. Major companies like Microsoft, AT&T heavily involved, Tesla, all that sort of stuff. And as I mentioned earlier this month, Bitcoin processed 1 billion transactions. So is it too good to be true? All right, mate, hit me. A little bit more evidence. Crypto ATMs, when we started, like when Asita and I started, there was about 1,000. I remember them making a big deal about, oh, there's 1,000 crypto ATMs. Now there's 34,000. You go to Dubai, they're everywhere. Institutional investors, as we mentioned, lots and lots of private and public funds, ETFs, massive venture capital flow. I was just reporting in our webinars this week that this is the 3rd consecutive month in the United States where the venture capital inflow into the blockchain and cryptocurrency industry has exceeded $1 billion a month. Like, what else is there to build? $1 billion going into solving problems that probably don't need to be solved. But anyway, that's another story. The cryptocurrency derivative market, your options, your futures, your swaps, that's growing like crazy. So you're not even buying a Bitcoin, you're just buying an option to buy a Bitcoin or a contract. It's just insane. Billions and billions of dollars. Crypto trading volumes have surpassed many traditional stock exchanges. That's insane. Like 2.5 trillion, that's just nuts. And as you know, reputable financial institutions like JP Morgan, and remember, I'm assuming you're all hyper skeptical. So all those big fancy pants names and those big numbers are here to say that there's a lot of people with a lot more money than we have, who are a lot more invested than we are, who are taking a chance on crypto and probably Bitcoin. So if they're all doing that, why aren't we all making money? And so what's actually holding it back? So there's that lack of education. Like I said, built by a ghost disappeared. Who's going to step in and teach the public what not to buy and what to avoid and how not to get scammed? Governments are very, very late to the party. We'll talk about that a bit later. But this is the one that really annoys me. There's a conflict of interest, industry level manipulation and misinformation. So in traditional markets, a broker will let you come in, you deposit your money, probably a fee for that. Then you buy some shares or something, there's probably a fee for that. And then there's a spread, there's a fee for that. And then if you make money or you lose money, it doesn't matter, they make money. So the conflict of interest there is we just want to get as many people in and you just trade as much as you can, as often as you can on the most absurd ideas, like Elon Musk said this, therefore that goes down. Do what you can because we don't care. We're going to make our money one way or another. So the conflict of interest and the industry level misinformation comes from traditional markets, so we're probably a little scared about crypto. If you're a brokerage company and you've made all your money helping people buy and sell shares, and this crypto thing comes along, you're probably like, nah, stay away from crypto, it's dodgy. It's probably right. But there is a lot of that misinformation, active misinformation. And of course, there's Ponzi scams and security product ICOs, and it all comes down to handing over custody of your crypto. If you do go and buy some Bitcoin, and let's face it, a single Bitcoin right now is very expensive. If you simply give it to someone because they're going to tell you, oh, you can triple your money in 3 months because of insert whatever you want, by handing over custody of your crypto, you're probably in a Ponzi scam or a security product ICO. In other words, you're probably in some sort of coin that is actually illegal. We'll find out. Highly volatile, technologically intimidating. Nobody really wants to talk about cryptography and private keys. Satoshi envisioned, whoever Satoshi was, envisioned that everybody would want to be your own bank. They can all have a Bitcoin wallet. Everybody can do it. But not many people really want to deal with Bitcoin private keys. The funny thing is, if you send money to the wrong person, maybe you send it from the ANZ to the Commonwealth Bank, you send it to the wrong person, typed in the wrong BSB number. You could probably ring up the next day, complain, and have the transaction reversed. Not so in the crypto world. Sorry, if you forget your password, oh, there you go. This is great. Cryptos, 2.4 million of them. They only list 9,000. They only list 9,000 of them, which is lovely. This is the conflict of interest, by the way. World's largest data aggregator of cryptocurrency information, telling you what all the prices are and all that sort of stuff, which happens to be owned by the world's largest exchange. So there's no conflict of interest there. They wouldn't want to bolster their own performance and stuff. And sorry if I'm going a little slow, because in my mind I imagine we'd already finished the presentation. So one of the things holding back global adoption is this concept of changing financial risk and regulations. So everybody keeps changing their mind about it. Hilariously, all those people who invested heavily into Ethereum are going to get a bit of a shock when they realize, and we do this in our webinars, but when they realize that the largest Ethereum ETF of all time by Grayscale that has 650,000 on billions of dollars, they withdrew their application this week. What was hilarious was the SEC and the FTC are forced legally to make a decision about it in about 2 weeks' time. And the assumption was that because they'd run out of time stalling, that they would just agree to allow the ETF to take off. And there's a staggering amount of wealth sitting on the sidelines waiting for that to happen. And it seems to me that the SEC and the FTC decided they were going to deny it. So Grayscale's kind of pulled back, which makes me think that the world's number 2 cryptocurrency, those people who own it are going to get a rude shock because the SEC and the FTC are going to declare it a security product, which it should be, by the way, because it was initially launched with the expectation for profit, unlicensed security product. Anyway, the regulations and the financial risk keeps changing. There's new laws. It's all over the place. The laws in the United States are different to the laws in Australia, and yet I can send Bitcoin to someone over there and they can send it back to me and we can go through China, and that's another set of laws. So there is no international ICO standard for this industry. Why? Because there is no original benefactor centralized entity that they can turn around and say, right, we need you to conform to this. So that is one of the reasons why people are unsure. The Chinese are the best. Like, they decided in 2017, stuff this, we're not even going to be involved. So they shut down all the ICOs, told all the national banks we're not having anything to do with crypto, and literally outlawed crypto in 2017. They might be coming back into the market, and if that happens, then Bitcoin will go to $500,000 of Bitcoin, like, rapidly. It's not a guarantee, by the way, but that's probably what's going to happen. This is probably another one we've dealt with for 8 years, skepticism about the real results possible with cryptocurrency trading. When we were here, we did an informal presentation about a month and a half ago. I think it was about a month and a half ago. We were talking about a coin called ON, which we've been talking about twice a week live on camera for like nearly 3 or 4 months now. That coin's gone up 2,000% versus Bitcoin in 4 months. If I say that to people on the street, they just think I'm a Ponzi scammer. Like, there's no way that I can say, oh, by the way, that 2,000% that I was talking about, that was versus Bitcoin. But while that was happening, Bitcoin itself went up 50% as well. So you can add that on as well, because you're getting 2,000% more Bitcoin, and then that versus fiat is up another 50%. So when I say to somebody who's used to earning 12% a year with real estate, that you can make 12% in an hour legally in a liquidity pool of hundreds of millions of dollars on a regulated exchange, you can make that 12% in hours. Most people are like, nah, that's not real. Well, it is. Now, obviously, high volatility can lead to significant gains or losses. That's the thing, or losses in a short period. All right. Regulatory developments and increasing mainstream acceptance are changing, especially in Australia. Operating a cryptocurrency exchange requires a license now. Took them a while, but now, you know, if you're taking custody of hundreds of millions of dollars of Australian money, you finally have to have a license. The ATO is quite aware of what's going on. Unfortunately, some people still believe that due to the nature of crypto that they can get away with a lot of stuff. They're going to discover the hard way that that's not true. Many ICOs have turned out to be security products. That's happened a lot in America. That's going to happen in Australia, man. Like, there's going to be people getting smashed because a lot of the ICOs that launched the initial coin offerings where people just distributed a token and took everybody's money for it, they were security products in Australia as well. Under existing security product laws, they're going to get a knock on the door eventually. Investors should be mindful of phishing scams. Phishing meaning that they'll send you an email and say, oh, this is that regulated crypto exchange. There's a problem with your account. You need to validate your security, and everybody will just log in and give their full details, and now they've got your full details, so they'll go and steal it. Remember what I said about the Wild West? Once they get your crypto and they disappear with it, you ain't ringing up your local police department and saying, oh, somebody stole my crypto, can I get some investigator over it? No, it's gone. It's really gone. Even more annoying is when the world's largest exchange or the second largest exchange disappears overnight. We'll talk about that soon. So never share your private keys or login credentials with anyone. If you do have crypto and you have some sort of intent to hold it for a long time, or even if you're trading it, just don't give your crypto to anyone. If you do that, apart from your own sort of exchange wallet, if you give your crypto to someone because they promise something, just ask yourself the question, would I give someone $20,000 worth of my crypto? Would I give someone $20,000 in cash, a small little suitcase? Would I give them a suitcase of cash on some random promise of a 7-page website? But Australians and internationally, a lot of people are just handing over their money. So handing over your crypto keys or your login credentials, this is the same. It's ridiculous. So obviously, why does the public need crypto education? Yeah, so no one was responsible for educating anyone. Even to today, there's literally no police force. You don't have an international crypto police, crack team of police that are protecting us from malware. No, there's nothing like that. It is the Wild West, everyone gets away, government resistant nature led to internationally agreed upon laws. I'll talk about that a little bit. You can technically shove value or money around the world without having the say-so of a government. So you would be breaking laws, but the people who are breaking laws don't really care anyway. So the fact that the government can't really police and control it and lock it down means that it's been really hard to get some sort of international agreement about who controls what. And that's a really interesting concept that they haven't fixed. We talked about China, they just abandoned it completely. They didn't want capital leaving China without going through the government. And so obviously the government's like, hold on, are you telling me that you can transfer hundreds of billions of dollars worth of wealth out of China without asking the Chinese government? And they were like, yeah. And they're like, yeah, shut that down straight away. And I remember the immigration department in Australia was allowing Chinese people to come in on business visas, and they were just transferring so much wealth out of China without asking permission from the Chinese government that had export restrictions on how much capital you could move out of that economy. So the fact that the government resistant nature of it meant that most governments don't really police it the same way. There's different regulations, and specifically China got out really early. So essentially governments should shoulder some of the blame for not educating the public. If the government's there telling everybody every now and then on TV not to drink and drive, or put your seatbelt on, or don't run on a speed ride, okay, great. How about telling them not to hand over custody of your crypto to some scam? They try and do that. You can check the moneysmartgov.au website. This is like a game of government whack-a-mole, because every single day somebody new is coming out. We actually went to it like about a week ago. It was in the Hilton. That company is trying to do an ICO mega multi-level marketing pyramid Ponzi scam. It was really cool, but it was on this website, so they actually picked it up. To get on that website, you really need a lot of Australians to complain to the government. And when a lot of people complain to the government, they actually put up a notice saying, beware, they're not licensed. And that's ultimately all they do. So even the government is toothless when it comes to these types of scams, most of which operate overseas. They're quite sophisticated. We talked about how traditional brokers and asset managers see it as a threat. This is the other one. Influencers with an agenda to pimp every coin. So if you go onto YouTube, every single influencer's got an opinion about crypto. Most of the time they're heavily invested, they have a conflict of interest. Nobody's going to legitimately tell you. So is it too late? With all that being said, I sound really hyper negative on this, right? It's not true. There's never been a better time. Why? Because they're really cleaning it all up. And if you know what you're doing, then you can make a staggering amount of money. And a lot of people are. Bitcoin is becoming more scarce than ever, especially now that BlackRock rolled in and just bought it all. There's a great chart I was going to show you, but because it's a pain in the ass, I won't bother. But ultimately, the amount of Bitcoin that's out there for sale just hit a 10-year low. Think about that. Apparently, Bitcoin is a digitally scarce commodity. So there's Bitcoin everywhere, right? But the amount for sale just continues to rapidly decline. As these funds buy more and more and more of it, there's no resupplying it. In actual fact, the miners are now getting half as much Bitcoin to validate their transactions as they were a few weeks ago. Anyway, the reality is that Bitcoin is disappearing off the shelves. It's like toilet paper when COVID started. I just made that up, that was cool. Yeah, so BlackRock's involved and the rules are in place, tax departments sorted themselves up. The authorities are cleaning up the industry. Sam Bankman-Fried also known as Sam Bankrupt Fraud. He's actually in jail for the next 25 years. He was the CEO of the second largest exchange on the planet with hundreds of millions of people. The CEO gone to jail. CZ, he was the active CEO of the world's largest cryptocurrency exchange. He's going to prison only for 4 months. But his company did have to pay $4.7 billion in fines, and he had to pay $50 million personally, which I think he found under the pillows in his couch. But anyway, there are serious institutional players with long-term missions. So BlackRock, everybody thinks of BlackRock as this big scary dude in the... No, it's a group of investors. So these institutional players, the smaller funds, they're gathering up Bitcoin and they're making hundreds and hundreds of millions of dollars worth of Bitcoin funds and all that sort of stuff. Some cryptocurrencies may continue to rise because maybe there's some sort of quasi-correlation between what they plan on doing and what traders think they're worth. And let's say if the markets roll over, learning technical analysis will position you well. So in other words, if the stock market rolls over, and maybe it does, not knowing how you feel about Trump, but if Trump got in, I can imagine people reacting in a kind of a wacky way and those markets going a bit crazy. They'll either go to the moon or go straight down the toilet. Understanding technical analysis, that mathematical framework we were talking about, that doesn't just help you position yourself in crypto. It helps you in equities, Forex, precious metals. So how do you make money? First, you need to learn how to understand the cryptocurrency markets. A lot of that is just learning how to ignore the bad stuff out there, which gives you an amazing edge straight away. You just avoid all the rubbish. Learning technical analysis with a proven methodology to understand what potentially is going to happen to a cryptocurrency, that's really useful. We'll talk about that in a second. Because essentially it allows you to evaluate crypto or any other asset, its worth and potential future direction without having to rely on some YouTuber, without having to rely on the government, without having to hand over custody of your funds or anything like that. The key is to filter the market. So in other words, if I said, and I have always said, that 97 to 98% of all the opportunities in the industry are total garbage, wouldn't it be great if someone had some sort of filtration system to remove all that and to isolate from a mathematical point of view which cryptocurrencies have the greatest probability of going up, which ones aren't a scam? That's what we do. Yeah, so if you come to our live webinars, you get those top coin lists. So essentially what we're doing as educators is we filter the market. We try and remove all the garbage, and one of the side bonuses is that our human analysts and our algorithms basically help us find the best coins to buy. We also automate cryptocurrency trading, because what we discovered after teaching thousands and thousands of people and shoving hundreds of millions of dollars through our system was, if you're interested in crypto and you think to yourself, is there a way to actually make money out of this stupid industry full of scams? Yes, there is. You can technically buy cryptocurrencies which are undervalued by the market, and wouldn't it be nice if you knew how to find them before they went up in value? You can invest money without ever handing over custody. You can just buy it in your own wallet. You can watch that cryptocurrency go up, which is great. But you may need a level of automation. So what we discovered over 8 years, where you need education, automation, and support. So you need to understand how to do it, how to find the coins, how to understand the opportunity, but you may need to automate it, because maybe, according to you and our proven methodology and the world, there is a particular cryptocurrency that's absolutely brilliant. You don't know why, it doesn't matter. You've got a mathematical framework that shows you this is outperforming the market, hands down doing great. The only problem is you're supposed to buy it at 2 o'clock in the morning. And if you're not awake at 2 o'clock in the morning, you don't want to be one of those people chained to your computer. So you're going to need some sort of automation. So education, automation, and then you need a bit of support, because if that coin goes down, I gotta hate that word, but if the cryptocurrency goes down, you're just going to panic. And the other day, Bitcoin went down by 14% in one day. Most people in traditional markets, they can't even wrap their head around that. Maybe you have a bad year in real estate and you're down 14%. Maybe Apple stock dips, it rolls over. 14% in a day. It was actually in about 11 hours. How do you deal with that mentally? Most people can't. So we offer this level of support. So we might say to them, look, that's par for the course. Okay, you're down 12% today, but as it happens, our mathematical framework suggests that you're going to be up 30% next week. So just hang in there. There's other people who are going to come to us, and they do this all the time, and they say, I bought a coin, like dog with hat, and it's going straight down. What do I do? Do I just hold on? And we're like, no, just sell it and just move on, learn your lesson. So having that independent second opinion where we're not trying to sell you crypto, we just give you the support. That's the other thing. So education, automation, and support. That's essentially how you're going to make money with crypto. Yeah, so that's basically what we offer: education, automation, and support.